8 companies out today with results. It's pretty much information swimming all over the place and not much time for real analysis. But let's look at the headlines, and starting with Growthpoint, we've just had that interview with Norbert Sasser. Listed property, in your view, obviously Growthpoint is the big one, trading pretty much in line with what we've seen from other listed property stocks. Yeah,
on the Growthpoint front, there were no major surprises in terms of the distribution. As you alluded to, the single digits, I think 7.6% growth in distribution to 114 cents is pretty much in line with what we've seen.
Down from 14% on the prior period.
Sure, down from the double-digit growth that we've seen in the past, but that's to be expected. Given the environment, the retail space has been under pressure, so your turnover rentals have obviously been a lot less. Offices, there hasn't been huge demand for offices, and industrials, certainly on the manufacturing side, there's probably been a great deal of pressure. And I think in your interview to Norbert, you mentioned that vacancies have crept up, but not at alarming levels that you've seen in previous years. So
you're not concerned that's going to impact the distribution going forward, this uptick in vacancies?
No, not at all. If it suddenly had to jump to 10% in a year, then yes, that would be a huge red flag. But in addition to Growthpoint, Growthpoint also made that acquisition in Australia with that fund, which is very interesting. It's a fund that's similar to Growthpoint in terms of their portfolio mix.
This is Orchard's industrial property.
That's right, and it's got a key tenant in Woolworths, which is quite a substantial brand in Australia. And if you look at the Australian listed property market, it's suffered to the same degree that the South African market has over the last 12 to 18 months, since that share prices have collapsed. So you're buying a quality asset at a lower price in an economy that's very similar to South Africa. So I think it's a great acquisition. But let's not get ahead of ourselves. That will still take time to come through into the earnings.
Imperial pretty much in line with the expectations. No surprises on that front?
No surprises. As the CEO mentioned in his presentation this morning, it was a year of restructuring. They unbundled Xstrata, they cleaned up their balance sheet. Their debt to equity staying currently at about 50%. They're generating decent cash flows, and they've relatively maintained their operating margin. Although it did come down, they were closing dealerships and distributorships, and they're seeing growth out of the logistics business. And I think what's encouraging was the comments made about the European logistics business, where they're now seeing a pickup in demand across Europe for logistics, which bodes well for the future and gives you some indication that potentially, the recession has bottomed out and we're starting to see demand.
What's your call on the stock, though, on Imperial itself? Are you lightening your load at the moment?
We are lightening. Imperial has run up quite hard, so it has reached full value from our own point of view, and so we are seeing value in other industrials at the moment.
Distell also out with the results, having just spoken to Jan Scannell, the CEO, a good barometer of consumer behavior across the globe, given its traction around the world. And again, he's saying the consumer is buying down, but there's not much free float on this one. I mean, if you take out the fact that 30% of Distell is owned by SAB, 58% Remgro, there's only 12% free float.
He raised a very good point. The liquidity is quite tight. It is very difficult to get a meaningful position in the company. And as you say, it's a great barometer for what's happening on the man in the street. Clearly, consumers are buying down. But in saying that, it's interesting that in tough times people smoke and drink. So, that's one thing that they don't throw away. So
it's relatively defensive in nature then?
It's relatively defensive in nature. And what I also found interesting was the comment about the wine exports. Clearly, foreigners love South African wine, and that's good on them. But that's also another good growth area for the companies, obviously the wine exports, and you get the currency play on that as well.
Marian Roberts, I know you've only had an opportunity to look at the high-level lines on this one, but construction in general, we've got about 30 seconds before we've got to close the show.
Not a bad set of results, yeah. No big surprises, but there are other better valued building and construction at the moment, but not a bad set of results, no.
Michael.